Next guest saying that with the election over and that emphatic victory by the Labor government, she's now focused on a number of policies enacted by the government's last term, but not yet rolled out. And well, we'll also see what's ahead. Sarah Abood is joining us from the Financial Advice Association of Australia. Sarah, good to see you again.
Thanks, Andrew.
Yeah, okay, so Labor has that, Labor government has that mandate to work with. From your perspective, what do they need to do?
Right, well, there's certainly a lot of issues that are a priority for our sector, and we're very much focused on cost of living, making sure that Australians can get access to great advice, which definitely has, there's a key need for that right now. For our sector, one of the biggest issues adding to the cost of advice is the compensation scheme of last resort, which we've spoken about before. For us, that's a really high priority to fix. It's certainly something we'll be engaging with the new minister about as quickly as we possibly can. That is contributing very directly to the cost of advice for consumers.
Yeah, you also mentioned the need for providing advisor access to the ATO portal.
Yes.
Also, delivering better financial outcomes reforms. What does that look like?
Yeah, so there's a package there where we saw draft legislation for about half of the remaining reforms that are aimed at getting down the cost of financial advice, improving access to financial advice. So we're very aligned with the purpose of that, but we've only seen half of the package. So we're certainly looking to have the feedback that many players have provided on the first draft heard and listened to and carried forward, but we're also really keen to see the rest of that legislation. That this has had a long incubation. It goes back 3 years now, more than 3 years, to the start of the Quality of Advice Review. These reforms are really urgent, so again we'd like to see the government acting on those as quickly as possible.
All right, you also want to see red tape cut, particularly in the financial services. What sort of regulation does need to be loosened up, do you think?
Look, there's so much there. The Law Reform Commission spent 3 years looking at the Corporations Act, and they've made a huge amount of recommendations that would help tidy up the complexity of that legislation. But our sector has so many bits of red tape, forms, unnecessary compliance that is really adding to the cost of advice. There was a reform that was enacted about a year ago now, just to remove the complexity of clients authorising an advice fee to be paid from an advice product. That's one reform out of many that we need to see enacted. It really is the lowest hanging fruit because these issues are not helping consumers. That's our biggest issue. Now, one of the outstanding matters in this package is the Statement of Advice document, which is famously, you get this tome, 80 to 100 pages, yes, right, routinely. So some of the legislation we've seen is starting to address that, but there's legislation outstanding as well. So that alone would take a lot of cost and complexity out of advice and certainly make it easier for consumers to understand. So there's a lot there which we think is urgent, given the cost of living pressures that Australians are under right now.
Sarah, what about the legacy of the Hayne Royal Commission, where we saw so many advisors leave the industry? How do you encourage them, or what needs to be done to encourage them back in? And also, from a customer point of view, that issue of, I guess, the cost of advice.
Yeah, look, the issue we've seen with the advice industry almost halving in the last 6 years has partly been that's led to a demand-supply crunch. More and more Australians are retiring. They're looking for financial advice increasingly. I think we'll have something of the order of 800 people a day retiring over the next decade, and yet we've halved the number of advisors. So for us, trying to regrow the profession, making sure that we've got more people who can deliver specifically that professional financial advice in the client's best interests, which we know is the best service that can help consumers. At the moment, part of the reason that service is expensive is because of that demand, supply and imbalance. So yes, we need to get the cost of advice down, but we do also need to increase supply. So we're looking for measures, and the government could really help us there to help us regrow the profession.
And just looking at some of the more contentious bills that had come through, particularly Div 296, which obviously that additional 15% on super balances above 3 million, which is not indexed. I mean, that's the issue, isn't it? Yeah. So what are the implications?
Yeah, so there's been a lot of talk about that. Albanese has said, I think, that the student debt reduction of 20% is the first cab off the rank, but we don't think, we think that Div 296 will be the next one, as you say, doubling the tax rate for super balances over 3 million. So there's a couple of issues with that. One of them is the fact that 3 million isn't indexed. So that seems like a lot of money today. It's not going to be a lot of money in 40 years' time. And in fact, the average Australian on the average wage, before they retire, their balance will get beyond 3 million. So it will impact more and more people every year. So that's a really key issue that we have with it. The other issue is that it's taxing unrealised gains. So for people who have large illiquid holdings in their self-managed super funds, so farmers, for example, might have the family farm sitting in there. Business people often have their business premises in their self-managed super fund. That's going to be really difficult for them because they may not have the cash in the fund to pay the tax. So we're concerned that there's going to be this wave of selling of these assets because the funds won't be able to fund the tax bill. Now that's been controversial partly because of the Greens, and they have put forward a position that they would like to see that limit go even further down to 2 million. And they've also proposed restrictions on self-managed super funds borrowing to buy property. And given that the government needs the Greens in the Senate, that's another issue I think that we're all watching and that we're really concerned about. So we're not supporters of the tax. We think the limit should be indexed. We think that people need to be able to have time to address their assets before the tax comes in. So another issue that it's proposed to start from 1 July 2025. Now, it's unlikely that the Senate will sit before then. So if it is introduced in its current form, it will be retrospective, which I think will be really, really problematic as well. So yeah, we're concerned about that one. We're watching that one quickly, but I think the fact that the government has such an emphatic majority and with the Greens is able to pass legislation through the Senate, I think it's likely that a version of that bill will be passed quite soon.